Introduction to Accounting. It is the language of business. Accounting provides the financial information about operations to individuals, agencies, organizations. If you're an employee of a company, you're interested in the accounting. You're interested in if the company's making money or not. You want to know if you've got a raise coming next year, perhaps, based on what you know about how the accounting is reporting. Now, who uses this accounting information? This is worth talking about. The owners of the business obviously are interested in the business. They want to know if the company is making money. They want to know the current financial condition of the company. And give me one moment here.
Okay, I'm not seeing anything. I don't know if anyone else is, but it looks blank to me.
See the
It
PowerPoint.
looks blank to me too.
Bob, we're not seeing anything on the
Okay,
screen.
okay. I thought I asked and I heard you
Well,
say,
there was something and then now it's blank. We saw the cover of the book, but now it's blank.
oh God, could this meeting go any worse?
Yeah, so there, now we can see something.
Yeah, but that's not what we want. That's the,
Well, the second slide looks blank, so maybe you meant the third slide.
yeah. Yeah, let me just cut it out of here. Okay. Okay, sharing is stopped. Okay. Share screen. If there's a God in heaven, it'll come up now.
Okay,
Do you
now
see
Because there is a God in heaven.
Okay, good gravy. Well, I had a problem this morning. I woke up at about 8:20 at home and realized I had left my laptop at work, at school. I had to jump in the car in my pajamas and race down here to get on time. So it's been a tough morning. Okay. All right. You can see I'm assuming you see the slides. Now, introduction to accounting. And they talk about who is interested in the accounting. Well, obviously, there's going to be all kinds of players involved, starting with ownership of the company. It's ownership that will want to know what the company's position is. Are we making money? So if you've got good accounting records, the owners might consider additional investments. The owners might say, hey, we've got some good money here. We can invest in another factory. Maybe we can give employees raises. So owners want to know this accounting business. Now, if you work for a company, say you're a manager at maybe a store, a big department store, or you work in industry, you're going to want to know certain bits about the accounting. You're going to want to know if the company's making enough money to perhaps give you that raise they promised you a year ago. You want to know if you're going to be able to meet your bonuses. If you're a salesperson, you might get a bonus based on the amount of sales you make. You want to know this accounting information. Creditors. Creditor is a lender. A creditor is a bank. A creditor is somebody who extends credit to a second party. No one is going to loan money to a company that does not have good, audited, verifiable financial statements. So the accounting is important if you want to borrow money. You're not going to be able to borrow money if you can't produce good statements. If you're trying to interest investors in buying your company's stock, perhaps, you're not going to get anybody to invest in a business that doesn't have good accounting records. And finally, the government, the IRS, certainly wants to know your tax position. And they're going to start with your audited financial statements and go from there if you were lucky enough to be called for an audit, okay? Let's get to the next page. Accounting process. Now, they're going to talk a little bit on a few slides on different steps about how you gather information, you report information. And this is a little bit dry, but they like to put these on the test. Since we're doing online testing, Cornelia and I are getting the test questions at random from the test bank. We don't have as much input into it. And so they're going to talk about these different steps where you analyze, you look at an event that took place. It can be something as easy as you got the electric bill in the mail today. Okay, the electric bill's here. Well, that's an expense that we have to record. We're going to record it. Your second step, we're going to sit down and we're going to record it into our financial statements, into our general ledger. And we want to make sure that we classify it correctly. If it's the electric bill, we certainly want to tell our accounting system that this $300 is for the electricity bill or utilities bill, and don't make a mistake and call it something else. And then at the end of the month, after you've been doing these transactions on a daily basis, you're going to aggregate everything and come up with the final financial statements at month end. The reporting, that's where you get the statements done and you tell the results, and using tables of numbers is common. You'll have all kinds of perhaps helpers there. Most of my working career was in factories. I was a controller for the most part of manufacturing outfits, and reporting was a big part of the cost accounting world. At the end of the month, I had to sit down and go through a spiel on just about everything related to the manufacturing. How much we spent on raw materials, how much should we have spent, how much labor there. So you do your necessary reporting, and then of course the interpreting of it. Is this good? Is this bad? What does it mean? What can we do? Here are two acronyms that you must know. GAAP and FASB, GAAP, Generally Accepted Accounting Principles. Now you're going to hear this throughout the world of accounting. You're going to be you might be in an office, even if you're not the accountant, but you're reasonably well versed, and you'll hear somebody say, is that GAAP? Is that a correct GAAP interpretation? Generally Accepted Accounting Principles. These are the rules to follow in the preparation of financial statements. You cannot have audited, unqualified statements unless they are done according to the rules of accounting known as GAAP. And they are developed, those rules are promulgated by the Financial Accounting Standards Board. So those are two acronyms I'd like you to know. That's where all the basis for the accounting comes from. And I'll just talk a little bit about the process. I don't want to put everybody to sleep too much here, but the process. FASB will look at an accounting issue, and then they'll say, this is something we may need to address. Let's research it. And then they'll do some preliminary reports. They might even hold public hearings, because a change in the accounting rules can have a big effect on a company's bottom line. If they make a ruling that says this type of income is not really income, that can be a big exposure. So they look for these different issues and then try to come up with what they think is the right treatment for it. And let me just give you a little bit of an example. We've all returned goods to department stores, right? You do some shopping and you find out that the garment you bought was the wrong size. So you bring it back to the store. Oh, come on, shut up. You bring goods back to the store. Well, the accounting used to be, you bring the goods back to the store, and the store kind of, gets the benefit. The goods are, not the benefit, the goods are returned. Now companies have to estimate in advance that type of activity, and it put a whole new burden on shopkeepers and stores. That's a little bit of an example of an accounting issue. Another one that I think you might find a little bit interesting is gift certificates. You go to Costco and you buy a $200 gift certificate for somebody, and that person puts the gift certificate in their pocket, and maybe they forget about it for a while. And maybe a year goes by and that person has not used the gift certificate. Well, the stores now can't just say, well, that's great, that's income, we made $200. No, you didn't make $200 yet. You have to specifically estimate what the future use is going to be of those cards and come up with an expense. So those are two little examples of what FASB is all about. 3 types of ownership, sole proprietorship, partnership, corporation. Sole proprietorship is by far the largest category. Partnerships, corporations, they have advantages, they have disadvantages, and you'll learn a lot more about the three types of businesses when you take Introduction to Business here, or maybe you have already. Sole proprietorship, one owner, the owner assumes all the risk, makes all the decisions. One owner assuming all risk, all decisions. The advantage of a sole proprietorship, it's very easy to get started. You rent a storefront on State Street if you're lucky enough to do that. You pay a fee to the city of Santa Barbara, and off you go. The problem, if you want to call it this, with a sole proprietorship, is that even though the owner is entitled to all the profits, if that business makes money, you as the owner, you as the person who took the risk to start the business, you will reap all the benefits, all the cash, if you wish to do that. On the other hand, though, if the business goes sour, you are personally responsible for any losses of the business beyond your original investment. In other words, you invested in a store, you invested $10,000 of your own money. And after a year, due to some terrible circumstances, you ended up with a loss of $100,000. You invested 10 and you lost 100,000. Your creditors can come after you personally for that 100,000. You have nothing in terms of what's called a corporate shield. So you assume all risk, but on the other hand, you make all decisions, you do everything your way. And a sole proprietorship, it's easy to close it down. You just shut it down. You just lock your doors one day and you're done. Partnership, two or more partners. There are all kinds of different partnerships. We're just talking about a simple partnership, perhaps an accounting firm where the partners get together. You might have three partners in an accounting firm, and one is an expert in GAAP rulings. Another might be an expert in cost accounting. The other might be an expert in more general accounting type information. Partners share risks, just like sole proprietors. They may disagree on how to run the business, which is a big problem. Partners, just like the sole proprietor, you invest $10,000 in a business and it loses a lot more money. You are personally responsible for it. And in a partnership, if somebody dies, that's the end of the partnership right there. Must be reorganized. So partnerships and sole proprietorships, they're pretty easy to get started and run, but there's a lot of risk there. Corporations, this is what you and I might be involved in. Owned by stockholders. I own 100 shares of Coca-Cola stock. I've owned my 100 shares for a long time. Well, if Coca-Cola goes bankrupt, they're not going to come after me personally, even though technically I am an owner of Coca-Cola. I own part of Coca-Cola. If you took a walk on the beach from Carpinteria all the way up to Pismo Beach and you picked up one pebble of sand, that's how much I own of that company, but it's ownership. If a corporation goes out of business, they can't pay their bills. No one is going to pay a personal price. It's all your investment is the only thing you can possibly lose. If you're a member of the corporation, they can't come after you personally. Now, I'm not talking about deliberate fraud. They catch you, fooling around with the numbers. That's a different story. But corporation, you got the corporate shield, limited responsibility. Different types of businesses. This is basically the three classes at City College for you business majors: a service business, merchandising, manufacturing. A service business, there's no inventory. There's no product to sell other than intellectual property, A travel agency is a good example of a service business. A computer programmer, a physician. In our next couple of chapters, when we start doing transactions, We're going to be working with a service business that delivers pizzas to college campuses. Service business. 110 is pretty much a service business with a little bit of merchandising. 110, service business. 230, financial accounting. Now you become Costco. You become Nordstrom's, a business that buys a product from another business to sell to customers. Department stores, pharmacies, grocery stores, people like that. And then where I worked for most of my working world, the manufacturing business, a company that actually makes a product, like an automobile owner, furniture, a toy store, a pharmaceutical place, which is trying to come up with drugs to cure cancer and things. They physically make the product. Now, for purposes of worrying about a test, just know these three different types of businesses and kind of what they're all about. You have to be an expert in what they're doing. And here, we're just going to end up here, I think. They talk about career opportunities in accounting. Accounting clerk, that's probably the lowest level. You go to work for a company without any real background, you could probably start as an accounting clerk. They might start you off as an accounts payable clerk. In other words, you're the person who's going to open up the mail when you get bills. You're the one who's going to schedule them for payment. You're the one who might go to the machine and print the check out. Accounting clerks, usually involved with a small portion, such as accounts payable or accounts receivable, inventory, purchases, cash, etc. Bookkeepers require a certain amount of education. They're the ones supervising the accounting clerks, and they have to be knowledgeable to some extent in the accounting. They don't have to be CPAs by any means, but they have to know what a debit and a credit is and how to put it into their system. Para accountants, I'm going to skip. I never heard of that before. I always skip that one. And then you have the accountants. These are the people with the degree in accounting, if you will, or experience on the job that qualified them for this. And you think of the accounting people as sitting down there all day and they're writing numbers. It's nothing like that at all. You're going to be doing things like designing the accounting system, analyzing and interpreting information. You're going to look for trends in the data. You're going to study the impact of alternate decisions, and you're going to enter the field with a college degree. An example of this might be a company made money in January, February, and March. They were expected to do so. They were expected to do so in the month of April, and they didn't do as well. They kind of broke even. Boy, the accounting people are going to be over that like crazy. You're going to be doing the analysis that says, why did we fail this month? Well, our sales were too low. Why were the sales low? You might find out it was one particular customer who kind of stiffed you this month. The point is, you're going to be doing a lot of this type of analysis. In accounting, believe it or not, there can be quite a bit of travel. Where I worked all those years with Thomas and Betts, we had like 10 or 12 factories around the country. And that was kind of, to me, as a young guy starting off, that was a nice little perk. Every couple of months, they said, hey, Bob, you got to get on a plane and fly to Arkansas or someplace. As the new guy, I got all the crummy stops. I had to go to Arkansas, Swanton, Ohio, whereas the big bosses, they were going to the Miami factory. You get the idea. And now they just talk briefly about accounting careers, public, private, and government. Private accounting is what we're talking about in this chapter. The stores. You open up a store that's private. That's your private business. A corporation, that's private accounting. Okay, private accounting. Public accounting represents the auditing functions. You have a corporation and you want to make sure that you issue good, sound financial statements. So you have auditors come in, and the auditors might spend as much as a couple of months just going over 1 year's worth of financial data before they give you what's called an unqualified opinion. which is the best opinion. Unqualified means that these numbers are good with no qualifications. So the public accounting people are the ones coming in, do the auditing, and now they've expanded into management services, consulting, and other things. And then you have government accounting and nonprofit. They operate under slightly different rules of GAAP. They're kind of outliers. I was the chief financial officer for the Santa Barbara neighborhood clinics for about 5 years, about 18 or so years ago. That was nonprofit accounting. So you got your public, your private, and your governmental I don't like that not for profit, just say nonprofit. What do the public accounting guys do? Audit, taxes, management services. Here's a good one, forensic accounting. You can become a certified fraud examiner. But yeah, I mean, you put people in charge of big amounts of money. The temptation to cheat, steal, take shortcuts is there. And you need people to ferret them out. Here they're talking the private accounting again. This is what you're doing with your business. You're going to do budgeting and cost work, tax work. You have a controller. That's mostly what I was during my career. I was always a controller. That's usually the principal accounting officer. And don't make the mistake I made early in my career. When I put on my resume, I'm a hands-on controller. That's a euphemism for give Bob all the work. I found out the hard way. Let's keep going here. You get to the next slide. It's not sliding. Government accounting, you work for the state, or you work for the feds or a city, nonprofit. And then I'm not going to take us through this other than they're just showing you that there is a demand for accounting people. It used to be when I first started back in the early 70s, the very early 1970s, everything was done in pencil on spreadsheets. The only computers you had were these giant room-sized things that spit out things from punch cards. And then things got more and more automated. And so people automatically said, gee, that doesn't make accounting look good as a future job, because they've got all of this technology that can do these numbers much quicker. That's true. But it turned out what that did was open up more possibilities for accountants. There is so much data mining to be done, so much drilling down into certain details, that the more technology improves, the more you will need accounting people. And here they're just talking about the different jobs we just talked about a little bit. Controller, not going to worry about that. So that's a quick tour through chapter 1. Okay. You can, let me stop share here. Okay. So that's a quick poor man's run through chapter 1. When we reconvene on Thursday, we'll actually have some numbers to play with, okay? We'll get started on the accounting equation and how to set up financial statements. So with that in mind, again, I apologize for all the foul-ups we had today, including me being late. Now I'm stuck here at school in my pajamas. I'm exaggerating a little bit, but I'm here. And then I got my next, what time is it anyway? My next class is at 11, so do I go home or do I stick around here? We'll figure something out. So what do you think, Carrie? We'll help you out a little bit here today? You're on mute.
Thank you. Yeah, that was helpful, getting all that
Okay.
organized, even.
Okay, Laura's the one at work. Georgiana, was that helpful to you, I hope? Georgina's kind of quiet there. Okay. Hi, Melissa. I didn't get a chance to say hello to you. Are you there? Might be somebody else at work. Okay. And Susie. Hi, Susie. How you doing?
You're muted.
Susie with a Z. You're mute, Susie.
You're
You're mute.
muted.
There you go. Okay. All right, I'll let everybody go and we'll hook up again on Thursday and we'll have a nice solid 1 hour presentation and discussion, okay?
Great. Thank you.
Take care, everybody.
Bye.
Bye-bye.